Hello, and welcome back to Explain the Charts, your ultimate destination for comprehensive market insights. Today, August 1st, 2025, the investment world is fixated on Meta platforms, ticker symbol Meta, following what can only be described as a phenomenal Q2 earnings report. Headlines across major financial news outlets are proclaiming Meta stock rockets on results and asking, why is Meta stock rocketing higher today? Just yesterday, July 31st, Meta announced an impressive Q2 earnings per share of $7.14, convincingly surpassing analyst forecasts by over 22%. Alongside a robust revenue figure of $47.5 billion, marking a 22% increase year-over-year. This exceptional performance has significantly alleviated prior investor concerns surrounding AI monetization, demonstrating strong growth in advertising revenues and consistent user base expansion, leading to a decidedly positive outlook for 2025. Furthermore, adding to the current market fervor, there's widespread speculation about a highly anticipated stock split that could be announced as early as today, a move that would undoubtedly further amplify investor enthusiasm. However, it's crucial to acknowledge the broader market sentiment, as the S&P 500 has experienced a third consecutive day of losses, and recent warnings from Amazon CEO regarding AI's substantial power consumption and potential chip shortages suggest broader tech sector vulnerabilities. Despite these external pressures, Meta's individual financial results undeniably stand out as a powerful indicator of fundamental strength within the technology giants. The current trading price, hovering around the $770 mark, reflects this immediate positive reaction. Let's now transition to the visual evidence on our charts to understand how this compelling news has translated directly into price action. Beginning with the daily chart, we gain a long-term perspective of Meta's price trajectory over the past year, showcasing a predominant upward trend. Within this uptrend, we can clearly identify periods of aggressive growth interspersed with significant, often high-volume, pullbacks. A prime example occurred in late April 2024, where we witnessed a sharp daily decline, likely an initial negative reaction to an earlier earnings report, but this was swiftly followed by a substantial rebound on exceptionally high volume, suggesting strong buying interest at lower levels. Such volume spikes consistently correlate with major price movements, emphasizing the market's responsiveness to fundamental company news. Identifying these patterns is crucial for understanding the stock's character. The overall trend on this daily time frame has been incredibly resilient, overcoming various macroeconomic and sector-specific challenges. To capture the granular detail of the recent earnings impact, let's narrow our focus to the 15-minute chart, specifically highlighting the period around the announcement on July 30th. Observe the dramatic candlestick formation that begins around 1954 Universal Time Coordinated. Here, the price of Meta exploded from approximately $695 to momentarily touch $758.22, closing strongly near $755 within that single 15-minute interval. This astonishing surge was accompanied by an extraordinary volume of over 3.4 million shares traded, illustrating immense institutional and retail buying pressure. The subsequent 15-minute candles continued this aggressive price discovery, rapidly establishing new levels. This instantaneous market reaction underlines the importance of being aware of earnings release schedules and their potential to create significant volatility. Expanding our view to the 1-hour chart provides a clearer picture of the sustained post-earnings strength. Following the initial 15-minute explosion, the stock demonstrated remarkable resilience, consolidating its gains and pushing even higher. The 1-hour candle for July 31st shows Meta hitting a new 52-week high of $784.75, confirming the strength of this breakout. While we've observed a slight pullback and consolidation in the most recent hourly candles, reflecting natural profit-taking after such a rapid ascent, the overall structure remains highly bullish. Volume on these consolidation hours is notably lower than the earnings surge, which is a healthy sign for a continuing trend. This suggests that the underlying buying pressure is still strong. Returning to the daily chart, this recent move represents a decisive breakout above prior significant resistance levels. The area around $700 to $715, which previously capped upward movements, has now clearly transitioned into a critical support zone. For active traders, any retest of this newly established support, particularly if accompanied by diminishing selling pressure, could present an attractive entry point, assuming the broader market climate remains supportive. Meta is currently trading at or near its all-time highs, which is a powerful indicator of strong investor confidence and momentum. This robust outlook is further validated by Wall Street analysts, who maintain a moderate buy consensus rating. Their average 12-month price forecast sits at an encouraging $816.45, with some highly optimistic projections extending to $935. There's even ongoing discussion in investment circles about Meta potentially reaching the $1,000 mark in the midterm. This prevalent long-term bullish sentiment is fundamentally underpinned by Meta's aggressive and successful advancements in artificial intelligence, which are poised to fuel continued expansion in its highly profitable advertising business, coupled with its enduring dominance in the global social media landscape. Now, let's consider the nuanced factors for both short-term speculative trading and long-term investment strategies. While the recent earnings beat provides a powerful short-term catalyst, the slight post-surge pullback observed on the hourly and 15-minute charts warrants immediate attention. Always be vigilant for any signs of sustained profit-taking or a genuine shift in momentum. For instance, a significant increase in selling volume on a down day, potentially forming large red candles, would be a strong indication of a reversal, necessitating a reevaluation of short-term positions. On the bullish short-term side, a confirmed announcement regarding the speculated stock split could act as another powerful catalyst, potentially triggering an additional leg up by increasing accessibility for more retail investors. From a more cautious, or even bearish, perspective, it's important to acknowledge the recent insider selling activity by Jennifer Newstead, though generally considered minor in the face of strong fundamentals. More broadly, the tech sector still faces potential headwinds such as escalating AI infrastructure costs and the looming chip shortage highlighted by industry leaders. Investors should diligently monitor how Meta plans to manage these increasing capital expenditures and supply chain challenges, as they could impact future profitability. Crucially, always pay close attention to the volume accompanying price movements. High volume on breakouts or breakdowns provides strong conviction to the direction of the move, whereas low volume can signal a less reliable shift. Furthermore, keep a keen eye on overall market sentiment and macroeconomic indicators, as a significant downturn in the broader tech sector or general economy could still exert downward pressure on even a strong performer like Meta. To summarize our analysis and outline the critical price levels to monitor moving forward. On the upside, the immediate resistance is the recently established 52-week high of $784.75, a level that could see initial selling pressure. Beyond that, watch closely for the psychological barrier of $800. Subsequently, investor attention will likely shift towards the average analyst price targets in the $810 to $816 range. For the most bullish scenarios, the ambitious $935 mark represents a long-term target, and the $1,000 level is now part of the market conversation. On the downside, the most critical immediate support level for Meta is approximately $750 to $755, a zone where the stock demonstrated consolidation after its initial earnings surge. A more substantial and psychologically important support lies firmly in the $700 to $715 range, a level that previously acted as strong resistance and should now ideally serve as a solid floor. A decisive break below this $700 to $715 range, especially if accompanied by elevated selling volume, would be a significant bearish signal, potentially indicating a broader reversal and pushing the stock towards the $650 area. Our unbiased prediction suggests that given the strength of the Q2 results and the ongoing positive AI narrative, a short-term move towards $800 is highly probable, with an estimated likelihood of 75 to 80%, provided there isn't a sudden, severe correction in the broader market. Should the rumored stock split be officially announced, it would further reinforce the likelihood of Meta reaching the $816.45 analyst target, elevating that probability to perhaps 85 to 90%. Conversely, a sustained breach below the $750 mark would imply that the earnings-driven enthusiasm is waning, potentially leading to a retest of lower supports, a scenario we currently assign a lower 20 to 25% likelihood. Therefore, keep a vigilant eye on any imminent official announcements regarding the stock split and continuously monitor broader macroeconomic data, such as inflation reports or interest rate changes, for any shifts in overall market sentiment. That concludes our in-depth analysis of Meta on Explain the Charts for today. Remember to like this video, share it with your fellow investors, and subscribe to our channel for more valuable market insights. Happy trading, and we'll see you in the next one.